G'day there, ladies and gentlemen. Thanks for joining me with this individual market update and individual trade analysis. What I'll do for you firstly is say that this is part 2 of 3 in the way of a 3-part series, which I'm going to provide you with each weekend. So if you want to look at these 3 watch lists, of course, this is number 2. Subscribe to the channel, and it's something that you'll be able to look at over your own weekends as we transition into the upcoming week of trading right throughout the year 2014. So what I'll do for you is take a look at these top 12 individual symbols in this part 2 list. We've got eBay, Facebook, GILD, IRM, MA, MU, TSLA, Twitter, Yahoo, and ZINGER. Alright, I should have just said the company names: Tesla, Micron, MasterCard, Iron Mountain, and Gilead Sciences. So what we'll do, we'll start with the first one. That, of course, is eBay. And we'll just speak about eBay at the moment. What you can see is it's simply breaking down below many support levels. You can see we've broken this 57, we've broken this 55, and what appears to be happening is that we're soon going to break this 52 level also. So what I'm going to do for you is set this trade up at 52.66. I'm going to turn it into a thin line, and then going to provide you with, let me just get the right colors here, some additional targets for you. Now there's going to be 2 targets in particular which you need to pay attention to. The first target is $52 a share. That is where I'd exit out of my position first of all, and then, or at least exit out of part of my positions, hold until the second target down here, which is coming in at about $50.29. This has been old support for the month of October, for the month of November, December, and almost in January. Okay, so these 2 targets or 2 support levels, very important in the way of trading eBay. Now please pay attention, earnings is coming up later in April. It's not something that you need to really keep on the radar this week. It's definitely something, however, is that if you get triggered into a trading position on eBay, you need to be exiting this before the end of April. Let's move into Facebook. There are better trades out there. Facebook has really been quite volatile. It's been quite volatile all around this open window, right around this what we call gap support. Now it's interesting because we are starting to roll over. We have a failed gap. This could be an exhaustion gap. We're getting a series of incredibly bearish candlesticks. You can see all of these engulfing pattern candlesticks. You can see that we're up 4% one day, down 5% the next. We're up 3% the following day, down 4% the next. It's absolutely chop saw, but we're doing nothing. We're going nowhere. So all you need to do is simply bracket trade this individual share and say that if we break out above old resistance highs, then we're trading bullish. However, if we break down below old resistance lows, then we're trading bearish. Okay, bullish and bearish. One thing you need to do is pay attention. I'm not forcing this trade until I get better trade analysis and better trade structure. That structure is something that we can speak about in ticker symbol GILD. You can see how we had a really nice intermediate low down here, which really mapped out at the end of March 2014. And we said that if we break below that lower wick over here, around $67.21, then we can start looking at getting into some bearish positions. That's exactly what we did on Thursday. As you can see, we're profitable in the trade. Now we're holding this down to our first target, which is going to coincide right with the lower wick right here. So there's really 2 ways you need to play this out. If you were diligent in your actual trade analysis and your trade management, you should be out of GILD already for a nice profit. If you're not out of the trade already, I'd be looking to re-exit my positions down here at $63.90 a share, or at least somewhere close to that vicinity. That is our first target, and a very logical target. It's where we had an old resistance level in September, and again an old resistance level in October. We almost came down in November, and it's something that, again, traders are paying attention to at the current time. So GILD, a fantastic trade from last week, like many of our other shares, which we're going to get into, but I wouldn't be forcing a trade at all leading into earnings again. This week, really the name of the game is earnings, and it's such a bummer. It happens twice a year, but it's really the time in the year when you want to be taking a holiday, or at least forgetting about the market and doing other things with, of course, the money that you're making trading the stock market. Here's IRM. IRM, pardon me, we've fallen asleep on, really. We've had these 2 triggers, 29.24 and also 26.53. Finally, we're getting some action below 26.53. It's taken all but 2 months for it to occur. It is occurring now, and it's going to be probably a mad dash down to support down here, about $25.30 a share. All right, so again, earnings coming up. That's no sort of surprise to you if you're listening to this individual webinar or any of the videos that we're putting out at the moment. Please pay attention to earnings. You need to do it. It's very important. Close your positions out. If you're not out of the trade, or if you're not in the trade, you could re-enter upon the break of Friday's candlestick. I'd be doing it in a much smaller position because, again, you've sort of missed the trade. You've missed the best entry and the best risk reward ratio at about $26.53. MA, another fantastic trade. Bearish engulfing pattern on Thursday, follow through on Friday. Entry $70.16, trading down at 68.68. Ultimate target on MA down here at 66. Again, please pay attention to that E down in my lower right hand screen. Earnings announcement. If you're not in it, forget about it. Better trades in front of us, much like ticker symbol MU, Micron Technology. You can see over here, let me just move this. We've got a support level. We have another support level. You can see the buying pressure on the wicks. So we're looking for a close below $20.42 a share. If we get that, it's going to be a mad dash down to $18.50 a share. That is where this old resistance level once acted and then reacted as new support when we set up this bull flag breakout. So really, really good support and target level. If I just move it out to the future, right here. So this is a trade setup, 2042 down to what is it, $18.50, almost $2.20 a share. That's 10%. You put that in options, all right, it's even more. So really good trade setup on Micron Technology. Let's have a look at Tesla. Now Tesla, again, we had a 201 entry, a little bit of a whipsaw. It's okay. There's a little bit of a bullish candlestick, but definitely, this has got all of the telltale signs, of a bearish continuation. So I'm going to move this trigger down to 197.10. First target is going to be down here, approximately $183 a share. All right, $183 a share. That's really, really nice. What's that? That's about $14 of intrinsic value. That's supposed to be a 1 and a 4 on this individual trade. So really fantastic trade setup. I'm going to change this to red just so you know it's a target, or at least orange so you know it's a target. There we go. And that's the trade setup on Tesla. No bullish trade on Tesla for the week ahead. Twitter, again, taking very close to our ultimate target. You can see our two retrospective bearish entries, one at 48, the next at $43 a share. We're trading down here at $40 a share. So we've almost wiped off a bit over 20% of equity value in Twitter since our first entry, late March, right? Incredible trades on Twitter. Put options are going bananas, absolutely bonkers. People have made a ton of money. They're emailing me, congratulating and thanking me for this individual Twitter trade. That's fantastic. But please exit your positions before earnings on the 21st. That's all I'm going to say. Don't look at it this week. It's been a fantastic trade, but just don't hold over earnings. Another one which played out for us last week was YHOO. YHOO, again, entry $34.19, hit our target as of Friday at $32.40. So another successful trade which I gave you last week. Fantastic trade analysis. This is a really good setup if it wasn't for earnings. And I'm going to show you why right now. What I'm going to do is just duplicate this trigger, bring it over to here. And all I'm saying to myself is that, hey, we've acted as support once. We've acted as support twice, 3 times, 4 times. If price breaks below, all right, these 4 areas at $31.55, there's nothing holding us back until we hit $29.70. Now, that's not too hard to understand and comprehend, is it? Not at all. Price is king, and you need price to confirm. However, look at this. Pain in the butt. Earnings is being released as of Monday, it looks like. I'm not sure if it's before market or after market. So please, please, please hear me out. Do not have this open contingent order. Have it for Tuesday, or at least see what the gap does, and then trade in the direction of the open gap. Now to finish with, this is ZINGER. ZINGER, we had a trade up here at 465, trading down to the open window at $4.11. This also played out really, really well. Right now though, I'm not forcing a trade. Again, earnings coming up. You're at the base of this window. Anywhere in this green box can act as buying support because it is what we call gap support. So I wouldn't be forcing trades on ZINGER. I'd be simply waiting for the next, I guess, pertinent piece of information, which is going to give us that next trade setup at or above wherever earnings takes us. So that's really the second watch list, the next, or which consisted of 10 individual shares. This is part 2 of 3. If you enjoyed it, subscribe to the channel, leave some comments, get some chat going, some social sort of stuff moving, and I'll respond to you immediately. All right, immediately. We'll get some good information going back and forth, and I'm willing to help you out. Not with only these 10 shares, or not even with the previous 15 or the following 6 or so, but any shares that you want help with, just write them in, write the ticker symbol in the comments, and then we bring them up on the chart, and we can get some form of movement back and forth on this channel. So all the best, everyone. Thanks a lot. Enjoy your trading week. Goodbye.